皆さん、こんにちは。キャピタルアセットマネジメントのマーケティング部です。本日はスペインから助言会社 Gvc のシニアアナリストをお迎えし、現在の地政学情勢がグローバルな観光産業のファンダメンタルズに与える影響について分析していただきます。サンティアゴさん、イランの現状は観光産業にどのような影響を与えていますか？
What we are seeing right now is a classic market dislocation, a massive gap between headline fear and ground reality. Let's look at the hard facts. First, the entire Middle East represents less than 5% of global tourism GDP. Second, over 99% of the global cruises routes operates thousands of miles away from the tension area. 2026 bookings data shows ships are already 85% completely filled. Third, hotel giants like Hilton and Marriott get less than 5% of their total revenue from the Middle East. The ultimate proof, global tourism just hit a historic record of 1.52 billion international arrivals, up 4%. Because of fear, tourism stocks have plunged 15 to 30%, but global hotel occupancy remains rock solid at 66%, and travel spending grew to a record 1.9 trillion. The stock prices went down, but the business fundamentals went up. If you look at the historical playbook, regional conflicts always create a perfect 3-6 months window to buy the dip before a V-shaped recovery. The Gulf War in 1990, travel stocks dropped 30%, fully recovered in 12 months, and skyrocketed over 50% by month 24. The Iraq War in 2003, an initial 20% decline, fully recovered in 8 months. Also, the Ukraine conflict, tourism dipped for exactly 1 quarter, 3 months, before hitting roaring numbers. We saw this exact pattern during COVID-19, when we invested at 60% to 80% discounts. Look at our track record. Carnival Cruise yield 150% return. Marriott delivered 324%, and Hilton went up 200%, generating average investors returns over 200. Right now, the exact same movie is playing again. Market fear has discounted great business by 30%, while their revenue exposure is less than 5%. The math is heavily in your favor. As we always say at GVC, conflicts are temporary, travel is permanent.
マーケットの地政学リスクに続き、投資家の皆様から頻繁に寄せられるもう一つのマクロ懸念が原油価格の上昇です。原油高は観光産業にどのような影響を与えるのでしょうか？
Rising oil prices have a modest, manageable impact that is already fully priced into our projections. Wall Street sees oil at $100 and instantly panics, but history shows tourism is remarkably resilient to energy costs. Let's look at the current context. The oil price is trading around $100 per barrel, elevated but well within the normal 10-year range of 40 to 120. The historical proof in 2008. Oil hit an absolute peak of 147 per barrel. Yet global tourism still grew that year. Tourism demand is driven by the human desire to explore, not fuel prices. What can the travel industry easily withstand at oil spike? It's simple math. Fuel is a small percentage of total cost. It represents only 8% to 12% on a cruise vacation, a tiny 3 to 6% on hotel operating costs, and flight fuel surcharges are just 5 to 15% of a ticket. The minimal impact, a 10% to 50% oil spike equals less than 2% to 3% increase in total vacation cost. Consumers won't cancel a long-away trip for that. The margin protection, even with 20% oil spike, the net margin impact on corporation is less than 1 or 2% because airlines, hotels, and cruise lines can pass costs through smoothly. We are not concerned today because the industry defense mechanisms are stronger than ever. Fuel efficiency, newer ships, and planes entering the market are 20 to 30% more efficient. Green transition, rapid adoption of alternative energy like SAF or liquefied natural gas is structurally reducing oil dependency. Pricing power, post-COVID consumers have a very high acceptance of adjusted premium prices. Let's say the bottom line, oil price increases create short-term headline risk, but minimal fundamental impact. Another perfect example of market overreaction, creating a golden opportunity, disciplined investors.
最も重要な質問をさせてください。助言会社 GVC の視点で観光産業の長期的な見通しについて教えてください。
The global tourism industry is entering in a multi-decade growth super cycle driven by powerful structural tailwind. We are exceptionally bullish, and the numbers tell a massive story. Look at the macroeconomic projections through 2035. Global tourism GDP growing from 11.7 trillion in 2025 to 16.5 trillion by 2030. So capturing 11.5 of global GDP. That's 4.8 trillion in new value creation. International arrivals, for instance, hit 1.52 billion in 2025, pacing at 1.58 billion for 2026, and marching toward to 1.8 billion by 2030. The economic engine also supporting 430 million jobs by 2030, meaning 1 in 10 jobs globally will be packed by travel. We have 5 powerful structural drivers looking in this growth. We have rising middle class. Asian outbound spending alone will skyrocket from 350 billion to 650 billion by 2030. We have demographic sweet spot. Millennials and Gen Z account for 60% of the travelers, spending 1.4 trillion annually and fiercely prioritizing experiences over things. 3, behavior shift. 70% of customers permanently prioritize travel over other discretionary spending, pushing average trip spend up 17% to $1,170. 4, emerging market explosions. Saudi Arabia is targeting 150 million visitors by 2030 with an 800 billion investment. Indian outbound is expanding 167% more to 80 million travelers. And the last one, technology. AI-powered personalization and dynamic pricing are structurally expanding corporate profit margins. The convergence of rising wealth in Asia, generational shift, and tech-driven margins create a rare triple tailwind, driving the industry into a true golden age.
16.5 兆ドル市場。まさに観光産業の黄金期がこれからやってくるのですね。目先のニュースでパニックになっている場合ではないということが本当によくわかりました。GVC のプロフェッショナルな分析、本当にありがとうございました。当ファンドの長期的な運用方針がポートフォリオの詳細については、公式ウェブサイトのレポートをご覧ください。チャンネル登録といいねもよろしくお願いいたします。